Don Luskin want to bring you right away, because if you have to sell all the subprime assets, if Merrill sells them, if Bear Stearns has more problems, a lot of people in the market will tell you, along with that, there's going to be big sales of Treasury bonds, which could jack up interest rates. What's your thinking, Don?
My thinking is that this is just like Amaranth and Refco and the subprime problems we had in February and March. This is just another losing investor who has to take his lumps, and there is so much darn money in the world, Larry, that people are going to step in and they're going to buy these assets for cents on the dollar, and they're going to make money on them. That's creative destruction. It's a good thing. No reason whatsoever to worry about any kind of contagion in an easy money environment like the one we're in.
Let me go to Brother Luskin on this, because he's an inflation warrior. First of all, Don Luskin, are you a bull or a bear on the stock market going into tomorrow morning's open?
Oh, I'm a bull. I'm a bull. I think this is just an anecdotal correction that has really nothing fundamentally to do with these subprime problems or the Congress or anything else. And as to the issue of inflation, I want to get a word in here too. You know I'm an inflation hawk. You know where my broken clock is on that. But this move in bonds isn't anything at all about inflation. It's about growth. It's about the bond market realizing that the Fed is not going to cut rates because there's been a visible resurgence in growth, and that's what this move is all about, and that's why in the end it's going to be a good thing for stocks.
Don Luskin, you buying, what are you, commodities, the energies? Where are you right now?
I do believe that commodities and energies are a good inflation and growth play, but with the Fed not likely to cut rates here, one of the engines has fallen off the wing of that play. The Fed is not going to make the kind of inflationary mistake that it looked like they were going to make 3 months ago.
Do you think the Blackstone tax will pass, Dan? What's your estimate, guesstimate? You think it'll pass? It's going to have to get through both houses of Congress.
Yeah, well, I think that it could pass both houses of Congress. The question is, what vehicle is it attached to? If it's attached to a provision that has broad support, such as education, tax cuts, or possibly the alternative minimum tax reform, I think the Bush administration is in a really hard position to veto the bill itself.
What about the energy bill? They may stick it on the energy bill. That is even more cynical.
Yeah, but the energy bill faces a veto from the president on price gouging alone. And there are a whole bunch of other issues the president...
Oh, boy, I don't know. He loves that ethanol. He loves that biofuel money, Dan. He's like the reincarnate Jimmy Carter industrial policy, 1970s, here we come. Donald Luskin, is this Blackstone tax and the threat of a tax on hedge funds and private buyout funds, in other words, jack them all up to the 35% corporate tax rate from the current cap gains at 15%, Don, is this stuff depressing the market?
Well, it doesn't help. And I certainly congratulate Dan Clifton, my good friend, for being on the leading edge of warning the world about this and mobilizing a good response to it. It's God's work. But I actually don't think any of this is really going to happen, and if it does, I don't think Bush is going to sign it. The Democrats want to talk tough, but they don't really want to get to the president's desk with stuff like this, because they know that all this populism stuff, all this tax the rich stuff, this actually backfired on them in the last election. Wealthier people, white, married, rural, wealthy people, voted for Republicans. Poorer people, people who felt the economy was doing them a bad turn, tended to vote for Republicans, even when the Democrats won in 2006.
You know, Don,
so all this class warfare stuff is backfiring.
Don, back in '87, a Ways and Means Committee threat to put a big tax that would block the merger wave, which was kind of the buyout story of its time. The Federal Reserve itself, in their official report, said that had a bad impact on the October '87 crash.
Well, no question about it. The same kinds of things were happening there, but there's one big difference. In the late 80s, the business community, incumbent management, was being unseated by a wave of hostile takeovers. So very, very powerful interests were aligned against the private equity business at that time. It's now an inside sweetheart game where management and private equity are joined at the hip. There's really nobody but the crazy two Americas populists who are against this.
All right.
It's just not going to happen. They don't have the vote.